Sharp, shrewd, and prudent. That's how you become profitable in financial markets. Welcome back to another weekly market updates from Xylostar.
Global stock climbed this week because of strong tech and AI optimism.
Oil prices remained volatile somewhat, which actually pushed a lot of demand on gold as they've happened because of the geopolitical situation escalating in the Middle East, Iran, US, and also we saw a lot of cash flow into bonds. Let's see how these things are looking on charts. And by the way, I told you not to sell gold. All right, everyone, here we are coming back on the weekly market update, kicking it off with the technical outlook. Well, hypothetically, it is a technical outlook, but I do give you a lot of fundamental insights about what's happening here and there. So yeah, I'm kind of an all-in-one package. I'm kind of getting tired of saying exactly as I had highlighted in the previous week is exactly what happened in financial markets on literally every single asset we had spoken of. So starting with NASDAQ, as I highlighted for you guys, our target is 28,300s, and we can see that market had reached to that precisely before it reaches or 300 levels, before it found some rejection and continued to the upside. So hopefully you guys made some good trades with NASDAQ. Really beautiful setups here and there, and as we had spoken, we expected a retracement to the support, which gave you guys the entry to the target, which was a perfect trade. If you hadn't taken that, I don't know what you were doing. Okay, so that's about it. Right now it's about its all-time highs, 29,224. So from here we should see some sort of retracement before we go into a bullish trade. Well, over a longer period of time, I'm still targeting 23,000 per an ETF, or however this is sold. Okay, so here's the thing, guys. At early 2000s, we have the internet bubble, as in .com. A lot of startup companies started buying websites on the internet, putting it .com. A lot of people believed in the possibilities what may happen. And once the expectations to have positive revenue upon these companies came, as in timing, these companies failed to deliver what they had promised people. And we saw a crash basically in financial markets. Now remember, now we are in an era where AI is dominating. Every other company is having huge vision for AI and what they're going to do with it, etc., etc. There's something very, very important to keep in mind. That is, even if it retraces to here, I'm speaking about NASDAQ, I would not recommend you to enter a long position now. So the situation or the scenario is, right now we are having that huge belief in AI possibilities for the future. Hence, we are getting all these investments from here and there. However, at some point, some companies, if not a big portion of them, will fail to deliver what they are promising people. And because of that, we shall see a crash on NASDAQ. Is that going to be sometime soon, sometime later? I'm not sure, because this is not the only factor that is looming. We could be seeing a similar scenario to what happened in early 2000, and throughout history it's been always the similar concept or idea, as in whoever knows more about technology is who makes more money, right? Being smarter than or rather than working harder. So this scenario is there, and plus we have the geopolitical tensions. And these 60 days that is being given to the United States of America president to declare war or drop all these looming threats he is putting on top of Iran, soon enough they will have to come to a conclusion. And if it escalates or they declare war, regardless of how heavy it's going to be, that will impact negatively on stocks. Right? So yes, it could continue up from where it is, but this is a volatile, I will consider it a volatile movement, or the third phase, or the last phase rather say, in trends, and it is not optimal for you to enter here. All right? So rather keep it the way it is. If market makes a crash back to this demand zone and give us a confirmation, perhaps you can enter here again. But just a smaller retracement to 28,500s or 400s is not a good entry in my perspective. regardless of how you guys believe it. Right now, I shall update you soon about what may happen, but this is how it is for the upcoming week. If I would recommend staying away from Nasdaq unless if you're doing daily trades, and of course you're gonna find some opportunities. All right, going to S&P 500. Now, I had given an analysis on our Xylostar market updates terminal, if you guys are following up with it, since this was at 6,800. And I was telling you guys, this was like a month ago, was telling you in that analysis, I gave a lot of reasoning why S&P 500 should go up to 7,400. And as you can see right now on the chart, this is exactly the price that S&P 500 reached out to. So if you are seeing, or you had seen my analysis on that terminal, lucky you, that's actually $600 increase in price, like maybe 500 something, because you wouldn't enter exactly at 6,800. But that is a lot in price movements, which I see it as a very, very good revenue. Okay, that's about S&P 500 and Nasdaq. Going into gold. Now, as I had spoken to you guys in the previous week, and I told you perhaps I am the only one who is saying this. Yeah, I did put my career and my face value as a trading tutor and market analyst on stake, but I told you, even though the fundamentals were all bearish on gold, you should not be looking to sell. And matter of fact, it is better if you want to go for a trade, don't go for a daily trade, go for a longer period of time, which is like a weekly trade or a few days trade, and go for a long position. And guess what happened, guys? Boom. Yeah, financial market, as in gold in financial markets boomed up. And yeah, I told you so, just like usual. So right now we can expect a possible continuation to the upside. Now, one thing to consider, that gold right now is creating for us what is basically an ascending triangle and an ascending triangle, but vice versa. So I'll tell you something about this, guys. We do have actually a little bit of bullish intel on gold from there. So we have one of two scenarios to happen. All right, in my the way I see it. So first scenario is this pattern, right? According to my experience, when people were, okay, listen to this. When, especially in 2024, when gold was volatile a lot to the upside, volatile a lot? Okay, when it was volatile to the upside, gold had formed this pattern, and you can almost rarely see this pattern on any other asset. It had formed that pattern, and it was bullish multiple times, even though it was giving bearish signals. All right, so this pattern can actually be very bullish to gold, and we can see this as a very strong support, and we can see gold just continuing up from here, right? On an alternative scenario is we are having markets forming up of us after this break above the trend line, some sort of a head and shoulders, and there is good bearish retracement here. So maybe on market opening on Monday, what we see is a break below this neckline, where gold can go into this zone here where it is more demanded, right? We get a confirmation and we go for a long entry. Now on a week or 2 weeks, we can expect gold to go to $5,000 per ounce, right? On a longer term, of course, I expect this to go higher and higher, because remember, guys, BRICS countries are still, okay, a lot of details. You want to know more about it, just come to Xylostar. Okay, so that's about gold. If we get a confirmation from this demand, or this support, rather say, than demand, right? You can go for a long. If not, then we wait for that short. And actually, you could take a short trade on a daily time frame, not a daily time frame, daily time range, in order for you to make some decent trades, setups. We don't mention that word here on YouTube. All right, so that's about gold. Very, very interesting assets. All right, now you guys tell me in the comment section, who else is telling you what I'm telling you, okay? All right, Great. So if you want to learn how these things are done, you can always come and learn from me at the Institute, and I'll be gladly teaching you how to analyze, anticipate, trade, etc. Bitcoin, what was I saying? Yes, I'm bullish on Bitcoin, and that's what we saw. It spiked to 82,700s. MicroStrategy, which we are going to show the chart right now. As you can see, this stock, few months ago, I was telling you by February this year that this stock is a historical opportunity to invest in. The price was approximately 124 to 123, and right now it had crossed 188, and yeah, so that is also there. Bitcoin, similarly, also it's moving up, as I had highlighted. 65,000 was the historical price to enter, and here we see it as 82,000. We got some retracement. From here we can expect a continuation to the upside. Well, Bitcoin is considerably, right? It had made another trend here, and we saw a break and a movement to the upside. Well, we could see a little bit of down movement to the support, right, before markets break above this and continue to the upside. So that's about it. You get a solid confirmation, you can go for a trade on Bitcoin. So that's about Bitcoin. Going to Euro USD, well, in the previous week I had also spoken that there is Euro USD should be bullish, but because of the reasoning I had highlighted in the previous week, why the demand on dollar is there, it is consolidating. So we had spoken as in it could do this, and this is exactly what happened. Right now we are having actually some sort of bull flag on Euro USD. Also, multiple intel can be extracted from candle formations in this area here. So we could see a possible movement to the upside before a movement again to the support, as it is forming for us this falling, rising wedge pattern too. So on a weekly time frame we have, or weekly time range, not time frame, on a weekly time range we are having intel for both directions. So I would recommend you to trade it on daily basis rather than taking a week trade on Euro USD. Yeah, most likely it is going to consolidate, but we might see the price going up a bit. I have actually a lot of details I can share with you guys, but I had understood that you prefer it as an audience to be short and on point. So that's what I'm trying to do now. Okay, that's about Euro USD. Going into Nifty 50, analysis still remains the same. We expect a movement to the upside, downside and upside. This is what happened. And we can see also mixed opinions about trading it, but we still have a stronger, let's say, sentiment upon the bullish side. And we can see this forming for us a very beautiful bull flag. And from here, we could actually expect Nifty 50 to move a pretty decent movement to the upside, right, to that resistance level. Or in an optimal trading scenario, you could target the 61.8 as it is also a resistance, right? So from here we could see a retracement for it to continue to the upside. It's also a resistance, and it is more of a closer to be a guaranteed, of course nothing is guaranteed, but closer to be a guaranteed trade rather than going for a longer take profit on Nifty 50. That's about it for this week. Of course, there are a lot of good investment opportunities. You guys can come to learn more about it in Xylostar. So that will be it from the technical side, and I'm going to shift the mic to Mr. Amedian from London.
Thank you, Samir, for sharing your analysis and the details as well. Here is Amir Amedian, Master of Finance and Investment student in UK and also financial market analyst at Xylostar. Last week, better than expected job numbers brought back the hope to the financial markets with better than expected NFP, job opening numbers, and at the end, PMI for services. Let's have a look.
Greeting everyone, welcome back to the weekly market update hosted by Xylostar. Last week financial markets was volatile due to so many reasons, such as the central banks, geopolitical tensions, earnings of the companies. plus economic indicators. First of all, I want to start with the central banks, as last week, at the beginning of the week, the Reserve Bank of Australia raised its cash rate by 25 basis points to 4.35% at the latest meeting last week, marking the third consecutive rate hike for the RBA in 2026. The bank also cited the persistent inflationary pressures due to the increase of the cost for the energy and fuels regarding the tensions at the Middle East was the primary reason of the rate hike last week. In the United States, the latest Services PMI showed that the US services sector is strong and is still in the expansionary territory, as it showed up by 53.6. The business activity improved while new orders slowed and employment stayed in contraction. Inflation pressures also remain elevated due to higher energy and fuel costs again. In the UK, the latest UK local election results dealt a major blow to Labour Party, whereas the most regions the Reform Party is taking the first place. The outcome highlighted the political fragmentation and growing voter dissatisfaction with the current party, which is the Labour one. Regarding the most vital economic indicator of the last week, which is NFP from the United States, in the US non-farm payrolls increased by 115,000 in April, while the unemployment rate held steady at 4.3%, and also average hourly earnings rose by 0.2% month over month, signaling continued wage growth. Meanwhile, payroll revisions showed February and March employment gains were collectively 16,000 lower than the previous readings. Regarding the job opening numbers, which is the best indicator to track demand in the labor market, it was unchanged last week by 6.9 million in March. The number of hires increased by 665,000 and the rate increased to 3.5% in March, more than offsetting decreases in the previous periods. Last but not least, the main reason of the volatility in the last 6 weeks of the financial markets, which is geopolitics. Tensions in the Persian Gulf remained high, with continued clashes between Iran and the US around the Strait of Hormuz, including missile exchanges and naval confrontations. Before jumping to the upcoming week, I just want to add one line more. Sign of the labor market strength lifted the stocks, reinforcing optimism that the world's largest economy, which is USA, remains resilient despite the energy shocks and also the tensions at the Middle East. Now let's have a look to the upcoming week. For the next week, starting on 11th of May, the main concentration will be around the inflation numbers for the United States, such as CPI and also PPI. Worth mentioning, the GDP for the Great British Pound and also the retail sales number for the United States will be published on 14th of May, Thursday, to check the financial strength of the families in the US. And also, before wrapping up the session, I just want to talk about the geopolitical tensions. The next week will be very important, as we will see whether the US and Iran gonna finally have a deal or no, the war is gonna be escalated. Stay tuned with Xylostar. See you next week.
Thank you for watching. Leave a like, share, and subscribe.